Okay, so I'll be explaining page 62 first, question number 2. Okay, this question actually asks us to prepare the capital, to calculate the capital of B's bookstore as at 1st July 2017. Okay, 1st July 2017 is actually the start of the year. Okay, so we're going to calculate the capital at the start of the year. Okay, capital at the start of the year can be calculated by this equation. A equals to L plus E. So E equals to A minus L. Okay, we're going to find out all our assets first. Okay, so on 1st July 2017, just look at this column here. List down all my assets. Okay, accumulated depreciation is a contra asset. So I'll write down minus A. Inventory, asset, TR asset, liabilities, trade payables, prepaid rent asset, accrued utilities liabilities, bank overdraft liability, cash at bank asset. Okay, then with this, right, okay, we'll just take all my assets minus my liabilities. Okay, remember that because allowance here is a contra asset. Sorry, not allowance. Accumulated depreciation is a contra asset. Okay, that's why I minus 4900. Okay, so assets minus liabilities here. Okay, I should get this value. Okay, equity is the same as capital. So in this case, capital is 43560. Okay, the next part, they say that following took place during the year itself, and they gave us all this additional information here. Okay, the first thing, owner withdrew $700 books for his son in August 2017 and $200 per month for his personal use. Okay, now because they didn't say anything about whether it was recorded, okay, so we assume that this transaction has been adjusted in these numbers above. Okay, so the transaction has been recorded in these figures above on 30th June 2018. Okay, hence we do not need to adjust in the accounts above. Okay, that means, right, I do not need to adjust for inventory anymore. I do not need to adjust for cash at bank anymore because the figures above, okay, for my inventory here, okay, and cash at bank would have taken into account this transaction. Okay, but what I need to do is to adjust for my drawings. Okay, when I'm doing my statement of profit and loss later, okay, there will be drawings and I need to write the figure over here. Okay. Okay, on 1st September, owner bought in some of his personal furniture for office use. Okay, no record has been made. Okay, therefore, if I look at this journal entry, right, it will be debit furniture or fixtures and fittings, credit capital. Okay, but because it has not been adjusted, okay, therefore we need to adjust plus 2600 here above. Okay, and there will be an additional capital later. Okay, this will be my additional capital. Okay, which is 2600. Okay, later in your statement of profit or loss, you will see additional capital 2600. Right? Okay, next part. Depreciation of furniture is to be charged at 10% per annum using the straight line method. Okay, straight line, a full year depreciation is to be charged. Okay, so when they say that is to be charged, the word is to be, okay, actually implies that they have not recorded. Okay, like for example, if I say that there is to be a test, that means the test haven't been conducted. Okay, homework is to be given. Okay, it means that I haven't given the homework yet. Right? So if they say that a full year depreciation is to be charged, it means that they haven't charged a depreciation. Okay, and you have to adjust. Okay, this is an English sentence lah. Okay, when they say is to be, it means that they haven't done it yet and need to adjust it. Okay, so how do we calculate depreciation for straight line? Okay, it's 10% times costs. Okay, so 10% multiplied by costs. straight line is cost, so it's percentage times cost. Okay, my cost now is $37,300, okay, plus 2006. Remember that I must add in the furniture from information 2 up here. Okay, so the cost now is no longer 37,300. These two figures add up together. Okay, so my depreciation is now 3990. Okay, my journal entry will be debit depreciation, credit accumulated depreciation. Okay, but remember that when we're doing the statement of profit or loss, I'm interested to calculate capital, right? Okay, and capital is given by A minus L. So I do not need to care about expenses account. Okay, that's why you see I put a cross here. Okay, I only need to care about the assets and liabilities, okay, basically items that are in my balance sheet. Okay, so I need to have another account here, adjust here. Okay, my accumulated depreciation will go up by 3990, okay, which is the figure here. Okay, last part, allowance for impairment is to be made. Okay, so same thing, whenever they say is to be, means that they haven't recorded it yet. Okay, therefore I have to adjust in the figures above here. Okay, so when I have allowance for impairment, okay, the original value, if you look at here, right, there is no allowance. So I start off with 0. Okay, and I want my ending balance to be 3280. Okay, this is my ending balance, right? I start off with 0 because there's no account here for allowance, but ending balance, they want it to be 3280. Okay, so there is an increase of 3280. Okay, and I need to create account, okay, debit impairment loss, credit allowance for impairment. Okay, like what I said just now, impairment loss is an expense. Okay, I do not need to care about expenses account because when calculating capital, I only want to find A and L. Okay, I'm only interested in the balance sheet items to find my capital later. Okay, so this one I can ignore it. But allowance for impairment, okay, I will write in here, this is a contra asset. So minus A. And it will be 3280. Okay, so with that, right, okay, my assets will be equals to my my assets will be equals to my furniture, which is this value, okay, minus my accumulated depreciation because it's a contra asset. So this value, 4900 plus 3900, okay, plus my other assets, inventory, TR, okay, and prepaid rent. Okay, and I have my cash at bank, 2160. Okay, and contra asset is allowance for impairment of TR, so I minus 3280. Okay, and I should get this value over here. Liabilities, 9180, and accrued utilities, $900. Okay, so liabilities is this figure. Capital equals to assets minus liabilities. Okay, just do a simple calculation. You should get this value as my ending capital. Okay, remember that we don't adjust the figures at the start because whatever is at the start has been brought down from the previous years. It's really fixed. I closed the account really. I cannot do anything to it. Okay, so all this additional information here is to adjust the figures at the end of the year because I haven't closed the accounts here. Okay, so I can still adjust these figures here. But figures that I've closed, which was carried down from last year, once I have closed the books, I cannot adjust this anymore. I cannot make any adjustments to these figures. Okay, so finally prepare a statement showing the profit or loss. Okay, this will be my statement of profit or loss. Start with ending capital, which is 50860. Okay, less beginning capital, which you got from part A. Okay, 43560. Okay, less additional capital, this figure here, 2600. Okay, add drawings. My drawings in this case is $700 plus $200 times 12 because it's per month. Okay, and finally, calculate out the figures. You'll get a positive number and hence this will be a profit for the year.